Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Friday, January 23rd. First up today, Intel revenue fell 4% in the fourth quarter from the year prior, despite a bump in its AI business. We will talk through the results with an analyst. We'll then speak to the CEO of crypto company BitGo, which IPO'd on Thursday. The company became the first crypto firm to go public so far this year. And we had some big fintech news as well. Capital One agreed to acquire payments and credit card startup Brex for more than $5 billion. We will discuss the deal with our managing editor, Laura Mendero. We've also got some more editors coming on the show for this week's Editor's Cut. We're talking through the big questions around this week's TikTok news and also OpenAI's ads play. And finally, we are going to close out the show with our big read from our weekend section. Today, we are taking you inside the big political donations from Greg Brockman at OpenAI, and we'll talk to our reporters about what it tells us about Silicon Valley and politics at large. It's going to be a fun show, so let's get right on into things. Intel reported its quarterly results yesterday. Revenue fell 4% in the quarter from the year prior, despite a bump in its AI business. I want to bring on Frank Lee, Global Head of Technology, Hardware, and Semiconductor Research at HSBC, to help us break it all down. Frank, welcome to the show. It's great to have you here.
Great. Thanks for having me on.
So what stood out to you from the earnings yesterday?
Yeah, so I think there's a couple of themes you can get from the earnings. I think the positive theme was that the server CPU demand looks quite strong. This is a point that management, I think, emphasized a few times. They've also referenced the fact that we're seeing more and more impact from AI making its way, and part of the agentic AI story is also driving much stronger server CPU demand. So I think that on a macro level was positive. However, I think, as you pointed out, the guidance on revenue was disappointing, and also the data center also looked to be down sequentially when in fact the demand is strong and they're sold out. So I think it raises a question about their execution, especially in their own production, that's not quite catching up. Now, they do expect capacity constraints should start to ease by the end of the first quarter. But I think, again, it goes back to the question of, an execution issue in light of the fact that, the demand is quite strong for them.
Remind us of the context here around these capacity constraints, because we hear supply chain issues ebbing and flowing. Sometimes they're more of an issue when they're not. Where are we in that story, and how much confidence do you have that it actually will improve the way that the company says?
Yeah, so I think, there's a couple of things that are impacting the overall supply side. One is Intel's own ability to produce its chips through their own fabs. And secondly, on a component level, there's going to be some issues as well, especially on the memory side, especially on an upstream raw material called ABFs. And so I think there's some uncertainty in terms of how much of it is their own issue and how much of it is just the component bottleneck from outside parties will be an impact going forward.
Tell me a little bit about how much demand there is from Intel's chips for Intel's chips broadly in this post-NVIDIA world. The company has been through certainly a roller coaster of sorts, but how much demand is there for Intel's technology today?
Yeah, so I think if you look at the server CPU side, a good reference point would be that ever since the AI story started taking off a couple of years ago, the overall server CPU demand has generally been flat. We haven't seen any growth. As we know, the first year of AI, the CSPs were really focusing on AI investment and prioritizing that over the regular server side. But this year, so what we're starting to see from the supply chain is that we could see something close to a 30 to 40% year-on-year growth. But because of supply side issues, perhaps we're going to see a lower growth, but still probably somewhere around 15 to 20% for the overall industry. So if you compare it to what we've seen over the last 3 years, it's basically flat growth. This is a really strong number. So I guess the question now is that demand is there, but can Intel actually take advantage of that?
And what do you think about the valuation broadly? We wrote a column this week at The Information looking at the valuations for Intel and then for TSMC, and we were looking at it on a multiples basis. And based on certain multiples, and I should say, we published this before the earnings, so might have changed slightly based on how the results went. But if you look at some multiples, I mean, Intel earlier this week was trading higher than TSMC on some measures. Now,
Yeah.
what do you think of that? What do you make of the valuation broadly?
Yeah, I mean, that's a good question. I mean, I think the thing with Intel is that it's not a simple story now because you have, besides the core chip business, you have this geopolitical aspect of trying to be an independent foundry and trying to compete with TSMC at some point. And this has been one of the areas we've been less confident on. And I think one of the reasons, shares have reacted as negative as it has been is that beyond just the fact that they're not able to, they have stuff, they still have capacity constraints. It's the foundry outlook, the independent foundry outlook. I think the market's gotten a little bit bullish about, more customer engagements, which we acknowledge, but customer engagements don't mean actual orders yet. They don't mean actual revenues. So I think the market got a little ahead of itself, thinking that, as given its position, given the US government owns Intel, that more and more customers are going to want to sign with Intel. We think the intent is there. The problem is like they need to deliver, which is still too early to tell these days. So in terms of going back to your valuation argument, it's definitely valid. I mean, if you look at TSMC, which is in a monopolistic position, it trades on a significantly lower multiple. But if you also take this conversation on a broader level, other AI semiconductor companies such as NVIDIA and Brockman arguably trade also at lower multiples with higher certainties in terms of their earnings profile.
Last question for you. When we've seen some reporting and some headlines around Intel maybe potentially considering some acquisitions to bolster its business, maybe some investments. There's always a talk about, hey, is Intel a better company inside a broader business? Walk me through your calculus around what acquisitions you think Intel could make to really turbocharge its business. Or on the flip side, I mean, do you think it's better as part of a bigger company?
I think, the complexity of Intel is that ever since they've announced they wanted to get into the foundry business, it's been a very controversial move. Is it better for them to basically be asset light? I mean, this is what A&D has done the last couple of years by working exclusively with TSMC, and that's proven, looking back, to be a great strategy because that's when their market share gains on the server and PC started to climb. But at the same time, I think Intel is in a difficult position because it has to be kind of the national champion now, and now with the U.S. government involvement. So I think they're doing the right things as far as my view is, which is to focus on the core business, which what seems to be what they're doing. They're not going to fully invest on Intel 14A in their foundry business until they get more certainty about customers and orders. So I think they're doing the right things for the moment in order to improve their returns. But it's going to take time, and I think that's why the market gets a little ahead of itself. Whenever they see a lot of headlines, but bottom line, they need to start delivering on earnings, which we haven't quite seen yet.
Great. Well, Frank, I want to thank you for coming on and chatting with us. That is Frank Lee from HSBC here on TITV. Okay. BitGo went public on Thursday, marking the IPO of another closely watched crypto company. Shares jumped in their first day of trading, even though crypto prices have taken a major tumble over the past few months. Joining me now is Mike Belshi, co founder and CEO of BitGo. Mike, welcome to the show. It's great to have you here.
Hey, Akash. Thank you for having me.
Well, congrats on the IPO. It's a big milestone for you and the company. I want to understand your calculus behind the decision to go public right now in this moment, because if you look at crypto markets, it's been a little bit of a bleak couple months, but you weathered it and said, no, we're going public. And, the stock market seemed to have a good reaction to it. But why now?
Yeah, great question. Look, a lot of what we've done over the last, 12 years of our existence is make sure we're as transparent as we can possibly be as a company. That's meant, how do we audit our technology? How do we do our SOC audits? What insurance do we have? What regulatory background we have? And as you know, we've been constantly upgrading all of these parts. Most recently, we just moved to an OCC Federal National Bank charter. So this is all part of being ready for the world's largest financial institutions to become able to come into our space. And we think it's actually a really important unlock. So last year, 2025, tremendous regulatory unlock. All of a sudden, I'm here in New York right now, you know, major firms all up and down Manhattan, previously had been blocked from touching digital assets by way of, the regulatory landscape, and now all of a sudden they're in. So our TAM has literally doubled. Being a public company allows us to serve them. It's much more easy for them to be able to come in and do diligence on a company like us as a public company than previously as a private company. So it's just a continued evolution of what we've always done. And then lastly, in terms of the stock price, I mean, I do care about the stock price. I don't mean to say I don't, but this is a long-term view we have in the company. Look, we're building infrastructure. We think it's all about growth. I think if you look at the performance of the company over the last 12 years, we've raised less money than pretty much any of our competitors by a lot. We've got more market share than our competitors, and we think that our status, not just here in the U.S., which people are familiar with, but also, fully regulated in Europe and in the Middle East and in Singapore, so we can meet our clients where they are, and we think this is all poised for growth. So the stock price is where it's going to be. Being a public company actually shows to all of our clients our continued dedication to being completely transparent. Come and take a look at who BitGo is, what we do, see our books, see how we run it, and hopefully become clients.
I want to ask you about the decision to allocate a significant portion of your shares to individual investors and having them access them through brokerages like Robinhood. This was something that the Wall Street Journal had some good reporting on. What was the rationale here on that?
Look, I think ultimately it's, your stock, you're trying to get it out to a broad distribution. And the retail channels have changed over the years. To be honest, I don't think the IPO process is uh, fully adapted to what's possible here. I mean, we can go direct to retail through a whole bunch of channels. I was amazed and impressed at the quality of information that we got during the IPO process, about the retail investors and their interests. So, look, we think ultimately this brand, our company will have a big impact and interest to retail clients. I think we saw tremendous demand from the retail channels. Really proud that we put about 25% straight out into retail.
So let me ask you this: is that strategy for everyone? I mean, there's a clear connection here between, well, clear, maybe not clear, but there's a seeming connection here between the individual investors and the idea that crypto has been very popular on some of these trading platforms like Robinhood. I mean, is allocating those shares or the distribution to individual investors, is that for every company? Do you think this will become more mainstream broadly, or is this just a crypto thing?
Look, I think retail deserves more credit. There's certainly a time, in history where, retail did not have as much information about the companies that they might be investing in, and it was difficult for them maybe to participate at the same level. Look, all the way back to GameStop a few years ago, it was very clear, like the retail investors, while they can band together and do interesting things on their own, they are very educated in terms of what's going on with stock. So part of our world is we want to be transparent. We welcome that scrutiny wherever it comes from. I think it's easier for traditional IPOs to have picked a small set, let's say, 200 various investors, and then you can try to understand what their selling and buying patterns are going to be, and you can try to get more predicted stock output. I don't know if that's really meaningful other than for a short term. I mean, for the long term, we're going to build this. We're going to continue to distribute more stock out over time, just like every other company does. And a lot of that lands in retail at some point. Like you have to be a company that can handle, being directly connected to retail. Lastly, though, look, tokenized equities are coming.
I was just gonna ask you that there are crypto companies now that have tokenized your stock, and I do you approve of that?
Well, they're able to do that actually without even talking to us. So, that's
Right,
fine.
right.
And do I approve
So
of it?
maybe you
Sure.
don't. But where
Uh,
do you like it?
well, look, I think if you play out what's going to come next in terms of the technology adaptation with, tokenization, it gives an ability for an issuer like BitGo to have a direct relationship potentially with their equity holders. And, of course, this is something that's not new to crypto, but who are your shareholders matters. And can you give them incentives and can you work with them and actually bring them into the fold in a better way? There's perfectly uh, uh, great examples where this has happened before. Berkshire Hathaway does this as well, not in a technology way, but in a manual way. So imagine in the future that BitGo could have clients. They bring one share into a BitGo wallet. We know completely that they are a shareholder, and now we can address them in more interesting ways. So I think there's a lot of good positive future coming. For the retail folks out there that did participate in the BitGo IPO, thank you. I hope most of you are understanding BitGo and really looking for the long term. And I would welcome every single one of you to go sign up for a BitGo account and check it out and see
So
if you don't like
let me ask you a question here then on this, where you see IPOs going then. You've just gone through the IPO process through maybe not as traditional a process as it would have been maybe 10, 15 years ago, but still a pretty traditional IPO process.
Yeah.
What does the IPO of 15 years from now look like? I mean, what is your vision for how that process goes? I mean, how you end up raising the money, how the distribution works? Just talk future sense with me.
Yeah, well, look, I mean, I think we've seen over the last 20 years, the US capital markets have fallen behind a little bit, right? Like we have fewer companies in the capital markets than we've had. And I think most of this comes down to we've made it really expensive for companies to hit the public bar. So that's unfortunate. I've heard Paul Atkins, the chair of the SEC, also laments that like we want more great companies trading on the US capital markets. They are the greatest capital markets in the world. Of course we want more. And so we have to find the right balance between regulatory and cost burden and companies out there. Technology is going to pave the way here. It's going to pave the way in terms of how we address those regulatory needs. It's going to pave the way in terms of new options to go public. The main thing about tokenization, in my opinion, is that it opens the door for innovation. So everything related to equities in the past has been tied up on a small number of now very established big company brands. So you recognize their names as broker-dealers in the world, and you can't really innovate around it. But once you're able to take, tokenized equities, we basically have an open banking system for equities, and now we can start to see the innovation flourish around all kinds of different applications.
So the main hurdle that you see this overcoming is the cost of going public, the cost of going through the motions of an IPO.
Look, I'm not sure that we've really covered the costs very well. The U.S. has a few things which are complicated here. We did pay our attorneys a lot of money to do this process with us. Once you're a public company, your exposure is very different. You get a lot of warnings coming into the public world. Insurance goes through the roof because they know you're going to get sued. We live in a very litigious United States. Look, some of those things are not fixable just with technology. In terms of the mechanics of how you do this, of course, that gets better. But yes, look, securities have to be traded under the rules of the SEC, and that's the Exchange Act of 1933, Investors Act of 1940, all that kind of stuff. So that doesn't go away just because you add technology.
Right. Great. Well, Mike, I want to thank you for coming on. Congrats on the new listing, and we look forward to talking to you again soon. That is Mike Belshie, the co-founder and CEO of BitGo here on TITV. Okay. Capital One is buying Brex for $5.15 billion. It is one of the most noteworthy fintech deals that we have seen in a long while for many different reasons. I want to bring on Laura Mandaro, who wrote a column on the transaction last night in our Dealmaker newsletter. Laura, welcome back to the show. It's great to have you here.
Hi, Akash. I should correct you. It was Corey. Corey and I worked on it together, but
Oh, okay.
but
Well,
I'm happy to talk about it. We had a lot of discussions
you
about it.
Corey wrote it. Okay,
Yes,
okay.
yes, yes.
Well, it's all a team effort here, and Dealmaker is written by many reporters in the newsroom and many editors too at times. So, anyway, let's talk about Brex. So, did this deal surprise you? Because I was kind of shocked.
Yeah, I mean, we have for the last year been trying to report out what will happen with Brex. Like many companies that raise a lot of money at very high valuations during the low interest rate period, as you, Akash, know very well, that those valuations did not look to represent the value of their business once rates fell. And fintechs, were sort of a particularly acute segment, reflecting that disconnect between those the low interest rate period and the post period. I mean, there was such a rush. We're all about AI these days, but I was just looking at some of the stories we did in that period, and I think there was 121 billion raised by fintechs in just 2021. So, it was a bubble, and then there was a reset. And depending on the company, they dealt with it in many ways. I mean, um, Ramp, their big rival, and I'm sure you'll ask about that. Took a down round, so they sold shares at a lower valuation, and that was probably more reflective. But Brex had raised so much money, I don't think they were compelled to do anything like that, at least in terms of new capital raises. They did some internal recapitalization for their employees, which we can talk about. But so we never saw sort of a headline new number, but the secondary markets proved to be, pretty prescient. There were some trades and bids and offers on sites like Caplight that had been pricing the company around 4 billion. So we knew something was. At least in terms of the headline price, something was changing. And I was it going to be another round, or was it going to be, were they going to try to do an IPO? I think these were all open questions.
So now you mentioned the employees, and we obviously have the investors that poured all this money into the company. The big question here around this deal is who wins here? Is this a good deal? Was it a good price? When you compare the price to the valuation it used to have, it's about half of what, less than half, I guess, what it was. At the same time, I mean, $5 billion is a lot of money. So somebody somebody got something. Where do you stand on this?
I mean, that's the key. And the context is very important. I mean, before I got on the show, I was looking at the stock market performance of some of the venture-backed IPOs last year, and particularly Klarna, Chime, which is a fintech, which would be a comparable. I mean, these are all down substantially. Like Klarna's down nearly 40%.
I mean, the IPOs have really, I mean,
Yeah.
they may have been hits for the investors selling shares, but I mean, the stock price has tumbled really for
If
both of
they
these.
sold at the IPO,
If they,
but
yeah, that's right. Yeah, if that's true.
there are lockups,
Yeah,
right? So you can't sell on day one, nor is that seen as a good thing.
right.
And so, I mean, if you're an investor in Chime and buying very, very early at pennies on the dollar, I think we have reported, for some of those early rounds, sure, it's still a great return. But I mean, last year, I think, gave investors and founders a lot of information about what the IPO market was like, right? You could go public, you'd probably be at a much lower valuation than your private valuation. I think that's pretty established. And it may not be hitting it out of the park as a public stock. So a $5 billion price tag, while, at first blush, you're like, wow, that's a lot lower than 12 billion. It is kind of money in the hand, right? For investors and employees. It's first of all, there's cash, which doesn't hurt, and in Capital One stock, and Capital One stock's been up in the last year. So I mean, it's not, it's not,
It's a good deal. I mean,
yeah,
it's a deal that it's
yeah.
everyone's looking for a deal. So to the extent that it is a deal, it's a good deal.
Yeah, I mean, and back to the column, our deal maker column. I mean, we retopped it once we saw the Brex deal, but the column I had written, it was sort of speaks to this moment, which was about how there was a decline in VC funds making new investments last year, which really speaks to few. VC funds are having trouble fundraising. Why are they having trouble fundraising? Outside of the very, very big ones, of course, like Andreessen, but there are a lot of VC funds that are having trouble fundraising because they don't have exits. They don't have IPOs and M&A to return cash to their investors, like universities and pensions. And when you don't return cash, you don't necessarily get more cash in. So this is the kind of transaction that I think universally for 3 years people have saying would be healthy for the market, and we just haven't seen as much. So, the investors should at least get their investments back, if not with a return because of the sales price, and this is preferred stock. And then Corey wrote that had reporting that the company, and we hadn't known this, had reprice the employee stock options in the past couple of years. So so that these options were kind of priced to reflect the true valuation of the company, and so they weren't underwater, so to speak.
I want to ask you one more question. You mentioned the ramp of this all, and that's what people are talking about that a lot online. That here's a company that raised, I think, what was it, 3 consecutive funding rounds last year, or at least they announced it last year. They're contrasting that with Brex. The broader question that I have for you, Laura, is, I mean, look, the purpose of fintech was to disrupt in some ways the traditional financial
Yeah.
system. And here you have Capital One, basically eating one of these fintech disruptors, you could say. Do you see this? Do you see more of this coming potentially as these fintech companies? It's not just Brex and Ramp. I mean, we saw a couple go public, but there's a lot of these smaller fintechs, I'm sure, that are hanging around that are looking for some kind of an exit. Are we going to see more of these acquisitions?
I mean, I'm sure many of their investors would hope so, right? And historically, these big banks and big banking companies have been pretty acquisitive. There's always trouble integrating, and we've seen that a lot too over the last couple of years, especially with fintech. But yeah, I mean, this could be a signal in the market that there are more to do. I mean, I don't, I think the bigger question is, will there be enough deals to kind of resolve so many of these private tech startups that have been created? And I don't know. I think it's tough. There was a lot of money put into this space, and maybe some of them will pivot to some degree. I mean, I think that with Ramp and Brex, you can see sort of by their messaging. It was very especially with Brex, very payments oriented. A couple years ago, now that you hear more about software and AI agents, and
Yeah. I mean, like the fintech story that we're seeing play out now from the funding boom 4 years ago. I mean, it's like there's probably an 18-month lag on like all the crypto startups that raised all the money, and then there's maybe a 2-year lag on what we're going to see with the AI startups that are raising all this money. So it's sort of like we're just seeing the cycle
yeah,
unfold.
yeah, and I mean, I was talking to Corey, and it does, there it. I think clearly there can be a disruptor in this space, this corporate card expense space. But can there be 2 to 5? Maybe not. And I think with many segments of tech, you saw that in ride hailing, right? There's pretty much 2 in the U.S. It didn't start that way. There were many derivatives of ride hailing in the teens. So this is to some degree kind of a natural evolution of tech startups where 1 to 2 companies gets really big, and that's it.
Great. Well, Laura, I want to thank you for coming on. That is Laura Mandero, our managing editor here at The Information. Okay. Speaking of editors, for this week's Editor's Cut, I want to debrief a busy week of tech news. 2 of the big stories were the TikTok deal finally closing, and also in our own newsroom, our reporting around OpenAI's ads play. I want to bring on Martin Pierce and Meredith Mazzilli to break it all down. Welcome to you both. It's great to have you back.
Hello.
Hey, Kosh.
So, Martin, let's start with the TikTok deal. The long awaited saga of TikTok seems to have come to some kind of a close yesterday. You have thoughts on this because it's not actually the close that a lot of people are saying that it is. What did you make of it?
Well, I've just noticed there's been a lot of coverage of it as though TikTok has been acquired and it's under new ownership. That's not really what has happened. And I think there's just a huge amount of misunderstanding about this. ByteDance has created a joint venture with a bunch of investors, many of whom were already investors in ByteDance. And they also brought in Oracle and MGX and Silver Lake. And this joint venture has housed the user data security arm, and it will also oversee the algorithm. But the actual money making part of TikTok is not changing. So when you read all these articles saying that TikTok has been acquired, that's just not really true. In fact, ByteDance continues to own a stake in this venture. The CEO is a TikTok executive. The board includes the TikTok CEO. So ByteDance will have a lot of involvement with TikTok in the US. I mean, it's hugely, really still involved.
Right, right. Well, look, we could talk about TikTok all day. I think the more interesting topic
Let's not,
actually
though. We've been talking about TikTok for
For
5
years.
We're all
for
sick of it.
years.
Yeah, and I mean, I think that's another interesting point of kind of this news cycle finally coming to an end. We've been looking at will advertisers ramp back up? Will merchants be pushing deeper into using TikTok Shop? And on one hand, there has been this uncertainty holding some back, but I think also some just got so used to the noise that it wasn't necessarily a huge factor. There's other factors that now I think will come to light that excuse isn't there so much that TikTok could shut down one day. And so that's something we're going to be looking at going forward, and think will continue to be interesting.
Well, and this is the whole thing is that I mean, any kind of legislation or regulation around any kind of social platform, especially in consumer, I mean, it takes years to play out, and then consumer trends change over time. We just had somebody on the show yesterday talking about how creators TikTok is not their favorite platform anymore. I mean, it's not the first one they think of, and so I mean, anytime there's any regulation, it's like it's all years behind.
Right. That's actually a really important point, which is that, yes, advertisers, for instance, we have asked advertisers repeatedly since 2020, when this issue first became an issue, whether or not they were going to pull back from advertising on TikTok. And they always said, no, we're just watching, but no, it's fine right now. Now, the big thing that could prompt them to pull back is if they realize that people aren't using TikTok as much. So that's the real thing that we should watch, not this deal, which isn't really what people think it is.
And the other thing that drives me crazy, Martin, about this deal and the reporting around some of it, this is something we talk about a lot in the editors' meeting, is just the exact terms of the revenue share and the profit share with this entity going forward. Share sounds like a very friendly, happy term, but it's not really clear how much, ByteDance is giving up. Martin, I don't know if you have any thoughts
Don't
on
know
that.
any of the details.
Yeah,
We don't know any of the
yeah.
details. This entire thing has been kept very much under perhaps. Yeah, I mean, my main point is, do not believe all the stories that you're reading that suddenly TikTok is under new ownership. That's not really true.
Right. And then, I mean, I'm just thinking, but, in terms of political wins that the Trump administration would want to keep track for them, I mean, this is something that he probably,
Well, Trump orchestrated this. He likes TikTok. He thinks that it helped him in the election. So he has chosen a deal which works for him. And I mean, honestly, that's how he operates. So we shouldn't be that surprised.
Great. Okay, well, let's talk about OpenAI's ads play, because we had some good reporting this week about how it is that OpenAI is starting to talk to advertisers about this, what amounts of money it's starting to take in early commitments. So, look, I sit on the other side of the office. For people who are listening, Meredith and Martin, they sit next to each other and they're yapping away all the time. And this week, they
I'm trying to
wouldn't
work and Meredith keeps talking. I
Right,
can't get
okay.
anything done.
This week, okay, the thing that they wouldn't stop talking about is the ads play, and I don't know what the debate is that you guys are having, but what is it that you disagree on? I don't really understand.
Well,
I
I
don't
don't
think
know
we
if it's
really
disagree
disagree.
so much as like we don't know what's going on, and we're trying to figure
Well,
it out.
speak for yourself. I know.
Okay, all right.
You may not.
Okay.
um,
So Meredith, but you don't know what's going on. I mean, like, so what? I mean, yeah, we don't know when the ads are really going to roll out. We don't know what they're going to look like. We don't know how retailers are going to act.
well,
Like,
let me zoom out a little bit and kind of explain why I say that. So this is kind of draw a parallel to the TikTok story. This is something that's been bubbling along for a while. OpenAI publicly has been coy about their ad plans, but this free user monetization, it was going to have to come from somewhere. And they announced last Friday that they were going to start putting ads in ChatGPT. Great. And then it turns out, as we were doing some more reporting, that the details that we're filtering out to advertisers so far are still pretty limited. What we did report last week and what advertisers are starting to hear is that they are charging on the basis of views as opposed to clicks. So not necessarily like a traditional search ad. And I think right now what we're trying to figure out as editors in the editor's room is what are the best comps? Like, how should we think about this business? Um, how do we compare it to other ad businesses when they launched? I know, Martin, we were talking about like if Netflix is a good comp. I don't know if you have thoughts there. I know you covered that ad launch a few years ago.
Well, I mean, look, the way I would frame this is OpenAI makes a specialty in announcing lots of things. They are, if you look at everything that they're doing, they are trying to expand in every possible way, and they just make a routine habit of announcing things, many of which don't really develop as they claim it will. And I think in this case, they're out there trying to raise money. They have to have a story to tell about how they will actually build the business. Advertising is an obvious area where they need to expand. So they've just made this announcement, but they don't have any kind of technology to run the ads. They don't have anyone selling the ads. They've got a guy who overseeing the ad business who doesn't have a background in ads. This entire announcement, you might say, is vaporware. And that's certainly the way that I think about it. It's not a
So
re
what? So why? Okay,
so
other than the,
we have to be more skeptical. That's my point.
I'm with you, but I mean, so what? The alternative, I guess you're saying, is launch the ads and then do the press release. That's what you're saying.
Well, I mean, I understand why they would do it, but they could say, "We're planning to do ads. It will take us a year to get it in place." Netflix, for instance, made an announcement. It took them a while. These things don't happen that fast. So the idea that they're going to start making money from ads right away is just not, believable.
Right. Meredith, is there any validity to the idea you have to tell people that it's coming? I mean, this is a platform that people are using more and more and more. I mean, you could make the argument that, hey, as long as people are talking about ads and they're expecting it, then whatever noise there is good from a user experience perspective because they know it's coming.
Right. I mean, I think there are a lot of those factors at play here as well. The way that OpenAI positioned their announcement last week was kind of like a heads up, if these ads are coming, trying to get out ahead of maybe user worries that they would be in sensitive chats or targeted at kids or things like that, which fine, like those are kind of unique concerns for ChatGPT that they might want to be getting out ahead of. But to Martin's point, they're also fundraising right now, right? So there's also a benefit for saying, hey, ads are coming, they're really coming, maybe even a little bit before they have that infrastructure in place.
Great. Okay. Well, Martin, unless you have any final thoughts, I think I'll let you guys get back to it. I know you have your editors meeting coming up. I want to thank you both for coming on. That is Martin Pearson, Meredith Mazzilli here, our most fun editors at
That's
The
fun.
Information. Okay. OpenAI president and co-founder Greg Brockman has largely flown under the radar during his career, at least in comparison to the company's CEO, Sam Altman. But Brockman has quietly become a big player in national politics with big donations to President Trump. The Information's big read this week takes you inside Greg Brockman's calculus, and just like every good politics story does, it starts with a glitzy night at a White House dinner in Washington, D.C. Joining me now are two of the reporters behind that story, Stephanie Palazzolo and Jemima McAvoy. Welcome to you both. It's great to have you back.
Thanks. Great to be here.
So, Jemima, I want to start with you. When you start out to report this story, and you've been reporting this for many, many weeks, what were the big questions that you were hoping to find answers to?
Yeah, you mentioned, the glitzy White House event. I think we noticed that Greg and his wife Anna had started showing up quite a lot in the Trump orbit, attending multiple White House dinners, the Kennedy Center honors, and then of course the the big thing was their huge donation to MAGA Inc., which is a Trump super PAC, and then another 50 million donation to a AI focused super PAC called Leading the Future. So we felt kind of that this had come out of nowhere. Hadn't really seen Greg and his wife on the political scene before. So the big question we're trying to answer is, where is this coming from? What are they hoping to accomplish? And so that's what we're exploring with the piece.
And so, Jemima, what answers did you find there? What do you think Greg is trying to accomplish with this?
Yeah, I mean, one big thing from speaking with people that have worked with Greg and know him is that, Greg is not particularly political or hasn't historically been very political. People couldn't really place him on the political spectrum. They said he didn't really talk about politics much. So one thing to note is that this is a pretty sudden transformation. It seems like there's a couple of things at work here. One is that he's very focused on putting OpenAI in the best position that it can be, and really focused on, the Trump administration is very friendly towards AI and taking advantage of that as best as possible. And that seems to be the main motivation rather than some sort of like big ideological switch.
Now, Stephanie, Jemima was talking about past donations that Greg has made, and it sounds like there hasn't been very much political activity until recently. Tell us a little bit about his professional journey. I mean, even before OpenAI, he was quietly a pretty powerful figure in Silicon Valley.
Yeah, definitely. So, Greg was actually first an early employee at Stripe, and then he kind of rose the ranks there. Eventually, became its chief technology officer, and then obviously joined to found OpenAI with Sam Altman and Elon Musk and a number of other founders. So historically, he's actually had a pretty unique role at the company. So even though he obviously is very senior, he's the president and a co-founder. He doesn't really kind of have your stereotypical like managerial exec role. So he doesn't, in the past, he hadn't really managed people. He instead was kind of this uh amazing like coder that they would basically put on different projects. So he would jump around from project to project, coding and basically helping out whenever there was an issue. And so in mid 2024, he did take a 3-month break from the company, and, based off of past reporting that we've done, that was at least partially due to, complaints that some other researchers and engineers had around, his very particular working style and perhaps how difficult it could be at points to work with him. That's something that he's also kind of acknowledged himself and, himself in interviews, even with the information. And so since he's come back from that break, he has taken on a new role managing kind of couple hundred people as part of the scaling org, which basically manages all the chips that OpenAI has and works on kind of scaling up the compute. So, as Jemima said, his kind of move into the political scene does seem a little bit out of left field, but it could be a very appealing one that's obviously much more in the spotlight than what he's kind of been able to do in the past.
John, I'm gonna come to you in a second to get a little bit more into what we learned about him as a person and what's driving him. But Stephanie, just to stick with you, I mean, help us understand his role in the scope of OpenAI, because he was a pretty central figure in. I remember when there was the Altman ouster, and then when he came back, he was a person that was very much in the mix here. I mean, is Brockman kind of the number two at OpenAI essentially? Is that fair to say, or I mean, how do we look at him?
I mean, I would definitely say so. I think people in the past have seen him as Sam's kind of right-hand man. As you mentioned, when Sam was kind of briefly fired in November 2023, Greg basically quit in protest very, very soon after. And so, yeah, he's kind of seen as one of the top two most important people at OpenAI,
Right.
someone very close to Sam, who's been a big supporter of him in the past.
And so, Jemima, one of the things that we really try to get into with these feature stories is what's really driving these people underneath the hood, underneath their professional ambitions. What do we learn about people as people? And I wonder what you learned about that.
Yeah, I mean, at the same time as this, kind of political ascent, we've had this other, Greg related drama that's been playing out in the public sphere, which is this, escalating lawsuit between Elon Musk and OpenAI. And it's been going on for a couple of years, but it's, heightened in the past couple of weeks because part of the court documents that were released were diary entries that were written by Greg. So
Yeah.
they really do give some, they do give some, unprecedented insight into what Greg is thinking and what motivates him. And so there's a lot of interesting stuff in there, including, this is the time when they're talking about whether to turn OpenAI or whether to launch a subsidiary that's a for-profit instead of just being an exclusive nonprofit, as OpenAI was originally founded as. And Greg, he's musing about his legacy. He's talking about, how much money he could make from it. These are things that he seems to care about his place in among this crowd that he calls the kings of AI. He's very focused on. It seems like he's interested in how he's perceived.
So
And
this is all from his diary. These are all reflections from his diary that have come
these
up
are
in
in
the
his
court
words.
filings.
Yes, these are in his words in his diary entries, his personal diary entries, which were made public in the case. And, at the same time, one source who worked with Greg told us that when they see him at all these events at the White House and such, that they think this appeals to this desire that he has for broader recognition. An OpenAI spokesperson said that, in fact, he's more focused on briefing leaders and government leaders on tech, and that's where his focus is. But it does seem like there's this kind of secondary thing of he's been in the shadows. He's relatively to Sam Altman, he's been that, lieutenant, second in command type person, and maybe this is giving him a bit more of a profile that he is perhaps enjoying.
This is probably a silly question, but how is it that someone can how do you summon somebody's diaries in a courtroom procedure? I mean, I get it. Like I've seen movies, I've read about the trials and stuff. You can get your hands on anything, but you can do that? Like how do they even know that his diaries exist, that he writes in a diary, Jemima?
Cut to you later tonight ripping up your diary entries so they don't get.
Well, I mean, these must have been. I mean, are they digital? Are they physical? I don't know.
Yeah, I mean, I think they were digital. It seems like they were
Yeah,
based on the
yeah.
format. Basically, yeah, in a court case, anything that's related to what the subject is, and in this case, the Elon Musk and
Yeah, and I
know,
guess you just assume you're he must have kept a diary somewhere. I must be able to get close. I don't know.
yeah, they
I
commend
guess
all documents, all written documents, all digital documents, like emails,
yeah,
text messages. So this falls under that purview. Unfortunately for Greg, probably.
right. Steph, I want to come back to you here to close this out. What do you think this story says about the broader story of Silicon Valley interacting with Washington? We've talked about it a little bit. Are we going to see more of this?
Definitely. I mean, this has been, I think, a huge theme of the past year. The fact that DC and Silicon Valley are just, more intertwined now, like more than ever. And so I think, yeah, you might have some tech execs becoming, quote unquote, true believers in Trump and kind of what he stands for. On the other hand, I think you have other folks that are instead kind of taking advantage of this moment to get on Trump's good side because they know how important he's going to be when it comes to, for AI specifically, everything from regulation to making it easier for AI companies to get access to chips and power. And I think, as Jemima kind of mentioned, in this case, it's not exactly clear which side Greg falls on, but it seems more than likely that he didn't just suddenly become like a huge MAGA fan overnight. In fact, we actually found that 2 out of the 3 kind of political donations, other than these most recent ones that he's ever made in his life, are actually to Hillary Clinton's 2016 presidential campaign. So he obviously in the past, before kind of really coming into the public eye, did support a Democratic candidate. So yes, I think pretty much we're going to see a lot more of this, a lot more of tech execs, whether they actually truly believe in Trump and what he stands for or not, kind of appealing to him, whether that means donations or just appearing at different public events, that sort of thing.
Great. Well, it was a great story, and there was a lot of really in-depth reporting. I encourage everyone to read it. I want to thank you both for coming on. That is Jemima McAvoy, our weekend reporter, and Stephanie Palazzolo, our AI reporter here at The Information. Well, that does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank you all for tuning in. We really do appreciate your viewership. I'm already excited for our next show on Monday. Have a great rest of your Friday and have a great weekend. Bye-bye for now.